Hello ladies and gentlemen, and welcome back to another special edition of the markets around the world, including stocks, commodities and cryptos. Well, what a week and what a month we just witnessed. We had a month that put on double-digit gains in the major indices. And of course, the Fed is potentially pivoting, leading to even bigger gains in this market. Luckily, as a community, we've been following the general technical trend, which helped us to define key levels. But now we have a big one coming up. Remember, back in March into April, the market made a new high off the resistance. We're at a very similar point right now with a lot of previous support and a huge level that we need to discuss. But there's so much more going on underneath the hood and so many opportunities. Gold, the US dollar, the cash safe haven of 2022. Things are really shaking up. So stay tuned as we take a look at everything right now together. See you soon, guys. This will be a good one. Well, welcome back everybody to the Daily Show, and I think we'll start by discussing a really important topic, and that is being adaptable to these markets. Now, of course, picking the bottom is always difficult. We may have already seen it. A lot of people are saying that the next phases of the market are depression and acceptance, and this is fairly common. Basically, markets will usually bottom off. They'll form some form of base. They'll come back up. They'll come back down to grab liquidity at a later stage, and then they'll be in the real rally. Now, the question is, are we going to get further pullbacks? Well, because of the real movement in this market, there is a good chance that that will happen and that markets will pull down to some key levels we'll look at later in today's video. But let's begin by looking at the stats. So we had a really bullish July. I mean, there's no doubt that was one of the better Julys on record. I think it was the best for a midterm election year. And what it means is that the August, September, and October, which tend to be pretty negative during midterm election years, we'll see that soon, may be volatile, but maybe not super negative. Now, the stats are pointing towards a little bit more statistical chance of being bullish than it was usually, and the average is not that impressive, but the percentages are still up there. So will we return to a bullish kind of market already? Well, that's what a lot of these stats are starting to point towards. Notice the biggest ones though, 1939, going back a long time now, and the 37 and some of the other periods, we actually got pretty negative August returns. And then we saw the big strength come in the back of October. September remains the worst month in the stock market in the US, really at any point throughout history. If you take history all the way back from the 1920s to now, almost 100 years of data, you'll find that September is the worst month of the year in terms of statistics. Let's now look at it. So basically, midterm election years, volatility tends to spike. Now that's interesting because the VIX, or the volatility index, is dropping down. Could this be an opportunity for volatility traders? I'm starting to think it could be, and you'll see on the charts what we're talking about very soon. So many big key levels being reached soon in what could be a nice little pullback. Now, one of the other main reasons why we were able to rally, and it's not just the Fed and not just pivoting and all these other bits of economic news people discuss, it's also the trap. I mean, when you think about it, retail traders were shorting at an incredibly heavy rate. If you're interested in the psychology of markets, it's what we talk about all the time. We bring the charts with the macro, with the psychology together to really understand what's going on. And we brought this up over a week ago, and we were talking about how all the retail traders were trying to short. That's why we've seen it. I mean, literally it was 70% bearish in terms of retail traders only a few weeks ago. And now look at it. The stats are coming up to 50-50 and people are starting to feel FOMO. That's when they set the trap the opposite way. And as a day trader, scalper, or anything like that, you want to be getting on board those kinds of runs. Here was the extreme greed versus fear. We saw an extreme level of fear, obviously, almost by all of the kind of breadth indicators, almost as bad as 2020. And since then, we've rallied and we've kind of found some buying pressure. Well, that's good, but of course, extreme fear greed showing there. Notice here on the charts, we're not really running extreme FOMO just yet. This will be an interesting result from, I think, this first week in August. 40% of traders have been bearish on the next 6 months. 32.2% are neutral and 27.7% are bullish. Now, what we want to see is this bearish number get even lower. In fact, I'd like it to see it around like a 36 or a 38. And at that point, especially if we're hitting key resistances on the charts, we could be saying, okay, well, maybe we need to be a pig. That is, we need to think outside the box. And at that point, maybe day traders come in to try to short this market or try to at least push it back down. At this stage, no signs of that. We'll look at the keys on the charts a little bit later. So let's discuss some of the best months in the year ever returned here for the Nasdaq. And guess what? We've just entered the top 20, 12.3% for July 22. Are there any stats here that interest us? Well, I think I want to bring this chart up more just to help people understand that in bear markets, you can have large rallies. Now, we don't know whether this bear market's over. Calling the bottom is always very difficult. We're seeing the right structure to show us some form of base, but we still think that there's a good chance there's a pullback before that rally continues on too much further. So you can see here that during the biggest rallies, you often ended up having a really bad market time. If you had 22% return in a month, that didn't end up working so well. But it doesn't mean that it is the beginning of a new rally down. Remember, we've got to be very adaptable in our mindset here towards these markets. Part of the reason why that adaptability has to come in is the Fed has no idea what's going on. And of course, they're now potentially pivoting. So the market has changed its expectations. They've said, well, we're not too sure how many times and what you're actually going to be able to hike this market at. Maybe we believe you've already hit peak inflation in the US and that's going to come down through its own course. So you're going to therefore have to cut rates earlier than expected. Look here at the actual versus the real, and that dropped even more on the Friday session. So at this stage, the market's betting on rate cuts faster and earlier and less hikes needed. And you'll see that manifest in the charts when we take a look at them later. Beat rates and of course earnings data at the moment, well, 67% beat rate. 694 beats, misses 345. So pretty decent earnings season. Even though the expectations were so low, it still is meeting expectations of the low ones. So that means that it allows the market to rally up here. AMD, PayPal, AMC, Alibaba, so many big announcements, not anywhere near the blockbuster week that we saw last one. But if you wanted to play earnings, there are quite a few big names coming out that could be interesting on the charts. Let's have a look now at the market movement. What can we tell from what actually happened? Well, of course, there was a massive big move that really happened off Microsoft and Google. When those announcements came off, they started a ramp that was pretty substantial. And of course, the Fed announcements, all of the other things, Apple, Amazon, all of those have helped to really capture, I guess, the market gains. It turned from being, not so good to very bullish very quickly. And we had quite a lot of nice turnarounds. We also saw incredible movements into hyper style stocks. That was TAN, solar, clean energy. Take a look at the gains over the last 5 days. TAN was 18.78%. And we saw some of the other stocks, some of the more defensive ones, just not doing as well here. XLF, XLV, so healthcare, consumer staples, they weren't really flying high like all of the growth kind of positions. But do watch XLE. So energy was up 10.22%. Interesting to see it jumping so much after such a huge fall in these markets. So where are we right now? Are we in a little bit of a bull trap? Well, the first chart I want to bring up is this one here, and I'm going to show you each one of the dates. Let's have a look at them together. 15th of November, 3rd of January 2022. Well, we all know what happened there. It went bad. And then we have here the beginning of April, back of March. Now, each time we saw here Sp500 stocks above 50-day moving averages move to a very similar point. Interesting. This is exactly where we are right now, and it was a little bit of a turning point for each one of these times in the markets. We actually saw the markets fall off substantially at these points. So this will want to coincide with potentially some price action in the markets this week. Let's move over here to the expectations coming into December and April of 2023. So we'll see here the December chart shows 3.24% is going to be where the federal funds rate it will be by the end of the year, according to the market. That's dropped from a much higher rate. So have a look here. 3.66 was the expectation. Now 3.24. So the market continues to turn this around. If we go here to April of 2023, this is where things get really different. We were expecting, or at least the market was expecting, 4% was where the Fed was going to have to push the rates. That's now come all the way back down to 3.25. So little wonder why the market has started to rally, especially in growth stocks. They're like, well, wait a second. we don't expect anywhere near the rate hikes that we thought we'd need in these markets. So remember, watch interest rates, or of course, subscribe to this channel, and we'll continue to follow along that process. So let's take back to that 50-day moving average, the fact that everything's on a really nice flow up, everyone's feeling great, FOMO's in, big month, all of those types of things. What else do we have that's interesting here? Well, the VIX, the volatility index, is dropping. And remember, August, September, and October tend to be volatility spikes in terms of what happens in the US market during midterm election years. Now, we mentioned this a few weeks ago, 24. Once we break underneath, we tend to move into the 20. We've done that every other time. Now let's bring some dates together. Notice before we had that 28th of March, we hit the 20. At the same time, we hit the top of those above moving average kind of breadth indicators. So will we go back down to the 20, and is that where, or around this level, and is that where we're going to start to see the bears get control of the market? There's a lot of synergy here with some key levels that I think technical analysts will want to look at through the next week. US 10-year dropped down. This is substantial. It's probably the most important chart of the week. It's like a massive head and shoulders. We have the left shoulder, the head, the right shoulder. For anyone that doesn't know that, definitely look up your patterns. And it's kind of showing us that the long-term outlook for the yield is quite low. So 2.65. I mean, you can tell here that the market's not feeling too good about the next decade at this stage. However, we'll see it manifest itself as it's broken below. That's going to potentially mean significant things for the market. Going down here on the 10-year can sometimes mean going up in the stock markets, and we've been following that for a while. The 2-year dropped as well quite a lot, 2.88% here on the reading. So if that keeps dropping as well, expect markets to like that. However, we'll continue to follow it along. We can't really predict that one just yet. This is where the real story has also been the dollar index, the US dollar. So we talked about it really around here. It ended up trapping perfectly. Go back and watch one of our previous videos if you're interested to look at what we were discussing in terms of the trap. The market's come down, the market rallied. Great trade in here, guys, if anyone got it. And not a bad trade either on the Friday session. US dollar and currencies have really been where it's at. So a lot of people are going to call this a Wyckoff distribution. Here's our UT. Here's the potential of a really large fall here on the US dollar. And it's probably overdue when you think about it. If you go to our weekly chart, you can see here that we are super far away from, we're on a bit of a big rotation. If we actually add a moving average, so we'll do that right now, we'll add a 20 moving average to the chart here. You'll notice mean reversion, or the 20 moving average, we're quite far away from this particular chart. If you look at this, here we go. There's the 20 moving average sitting around that 103. Well, we haven't touched that in months and months and months and months and months. Last time we were here was February. And then of course, this tends to be that kind of bigger pullback period once markets have done too much movement. They like to come back to the mean reversion. So could we be going there? You notice I've got a little bit of a red box around this previous high. 20 moving average is sitting there. We've just gone underneath the trend line as well on the daily. So you can see here the trend line that was there, that's gone underneath. And these daily candles are all wicking rejection. So we've got rejection, rejection, and a break below. Fairly significant. Rallies could be met by seller demand at this stage. It would be a pretty nice trap if they did push it back up. What do you guys think about in the comments down below? Do you think that the US dollar is going down for a little while here? Or is this just all of a trap and we'll be above this key zone here of 107.56 very soon? You have to be adaptable in these markets, but at this stage, you'd be thinking it's bearish. That's boded well for things like gold as well. We've been pretty bullish here on gold. We have seen a slowdown of money flow to the negative side. They've kind of neutralized and people have started buying it again in terms of the bigger players. But take a look at this. We broke through this key level. We could be rallying all the way back to that kind of 1800 level here on gold. And while the pullbacks are coming down, we're going to have to expect them to be met by bullish demand. So we've got kind of a first level here, which is sitting around 1751. If that level breaks this week, let's say we make a new high and then we come down and break it, you probably have to expect gold to come back into that 1720 level. But I think the buyers are back in this market. They seem to be coming back in. Gold's pretty undervalued at this stage compared to where it should be. A lot of people will say, well, gold sucks. Hey, I always go with this. 95% of the time, gold's very tough. 4% of the time it's tradable and 1% of the time it's really good. And possibly we're in that 1% of the time. We've been snapping all the bear busts, and at this stage it just looks to be rallying off that really massive level that we identified a few weeks ago together. Huge trend line, all sorts of things going on there. Another one that's doing better is oil. So oil continues to try to rally up and find its levels. Of course, 104 is a bit of a target here bulls will have on this market, but we have kind of like a structural base. Here's our structure. We breached the downward trend line that's on the higher time frames. We've pulled back. We've kind of rallied through this level we discussed in the last video. And anyone that was taking that in the Friday trade, if you got through here and you took that long, wow, it really smashed. We're back down to that level now. So we're looking for turnaround here. And if we get that, then of course, further bullishness could be in sight for the next week on oil. It's been hit very heavily recently. And as you can see here, we went from 123 a barrel all the way to 95. And possibly we're due for a little bit of recovery here. So be very careful on this one. It's the toughest trade probably in the markets at the moment, the oil trade, because there's so much political stuff going on. But of course, 104 would be a target for the bulls. And on the small time frames, there's a real potential for oil to do a little bit better, even in this current market condition. Let's move over to Tesla. Nice breakout here for Tesla. Filled the gap easily through the Friday session. Now is the next stop 950. So basically that previous resistance level. I think most Tesla traders will be looking towards that. They'll be looking towards maybe pullbacks to this gap, the previous highs, and trying to get longs off that. Day traders will. Most of the time I've said at the moment, if you like to play Tesla or even Apple here on the charts, that's getting close to resistance. You can see here the big resistance sitting around 165. The best way to do it has generally been to focus in on the S&P 500 and the Nasdaq. And then if you want to take Apple or you want to take one of these other stocks, getting it at that period. So basically you see the breakout and then you go pick Apple or Tesla instead of taking S&P or Nasdaq. The markets are moving strongly. Now, could this be again coinciding? Remember before we had VIX 20 potential. We had that percentage of stocks over the 50, quite a lot. And we also have quite a few key things hitting into levels. So Apple is a big one here. It's left some gaps behind. It's probably due for a little bit of a pullback after such a beautiful rally. And, you know, will we hit this target first, 165? There's a gap sitting here in the 158 area. You'll notice after the earnings, usually it likes to fill these. So we might move up, potentially move to the resting orders that are sitting here, hit the bottom of our trend line. Could this be a little opportunity for traders? Well, certainly this week, it's one of the ones I'm watching. I'm certainly watching very closely this 166 on Apple. I think it's key even more than a lot of other charts right now. Watching the Apple is important. Bonds, how are corporate bonds going? Well, they've been improving. They obviously have snapped kind of like a big low here, which we expected, coming up again to a resistance. So another critical point here on corp bonds, LQD, showing us that it's got some recovery in it thanks to the yields, but still not super healthy, I would say, on that chart just yet. XLY, XLP broke through a key level. So this is our consumer discretionary versus staples. It shows us whether the market wants to buy growth or not. At the moment, it looks like growth is the best play and defensives are out the door. And that happened once before. We saw it just kind of hit this key level and then it sold off. This time around, it does look like growth has made a base. So whatever happens here, when markets pull back, it does seem like growth is going to be the better 6, 12, 24-month plan potentially on the markets at this stage. That's kind of what you look for. When are you coming out of a recession, or even if we go into a new low, that first market pull up usually happens with things like XLY and of course XLK technology. They're the ones that usually come out the best and get hit the worst first. And that's what we've had all of 2022. Tech's been just savagely beaten. So a little bit of a breakout here, maybe a slight positive towards the growth side. Move over to the DAX. Great signs here of potential further slingshot effects early in the week. Maybe some more bullishness followed by bearishness later. Why? Well, we snapped every single one of these resistances. This is a big deal. Can we move to the 13,800 now and fill the gap on the DAX? This is the German market. It's certainly looking pretty good. Nice base formation. Hopefully it does continue up. Let's move over to IWM, the smaller cap companies in the US doing well again. Where's the resistance? 190, previous resistance here, previous support, big level, very close. Notice how Apple's very close as well. So many things very close. VIX as well. We're bringing a picture together. Will it work? Well, we'll have to find out. But certainly some key zones to be watched. Nasdaq, another interesting one. It takes out the previous high, but we do have some big levels moving forward. We've got kind of that recent previous sup level, which sits around 13,051. We're trading at the time of this recording at 12,950. So about another 100 points on the NAS, and we're starting to approach that downward trend line as well. So things are looking okay here. Let's just go down to the smaller time frames, and we'll focus in on, I think, the S&P 500 more so. But look at these rallies. Lots of gaps left behind here on the Nasdaq. You can tell plenty of potential of a pullback later on. And then, of course, maybe the liquidity does come back in. We'll have to look at the news on its merit at that point. But yeah, nice breakout. Certainly key levels moving forward. And we still have that downward trend line. And I think that downward trend line's most likely going to show us the bottoms in. Because if this gets broken, that is, they break this downward trend line, you have to think, well, we've gotten through the 20 moving average at that point on the weekly. We've breached the downward trend line. Pullback should be met by buy demand. So certainly watch this space. It's going to be a pretty important trend line chart. I've been watching it for a while. S&P 500 still moving forward. Very nice. There are key levels. Of course, we've got this 4.1 kind of 50 to 4.200 level that could be hit on the futures market. Anywhere in here is the real potential of a little bit of a sellback. But you're going to want to look for price action. And I think what that means is taking a look here at the futures market. So the futures market's made a new high. That's cool. It was a decent little Friday, pulled back, filled that little gap it was going to create, and then moved forward. So it leaves some orders around in here. So this is going to be an interesting point moving forward to probably discern whether the market is looking for a little bit more of a pullback. So we'll chuck that one on there between that kind of 40.80 and 40.67. That's going to be a key level. If the market did this moving forward, broke, and then pulled back, let's say to 4100, you'd probably want to look at your opportunities to potentially short there and move it down further. Remember, when we look at the S&P 500, it's left gap after gap after gap. These are all the gaps that we've left behind, plus probably a little one in there. Oh no, that seems to have filled. So this one, and this one. So these are all gaps that are left behind. So what about if the market came back to grab liquidity later on, or even went a little bit lower to grab liquidity and hit the 200 SMA? Things may be looking a little bit better, but at the same time, there's so much uncertainty in these markets and so many unfilled orders that are sitting in these systems. So certainly a point here to be careful this week of feeling too much FOMO. Remember, guys, patience, react, don't predict is a mantra of this channel. But also another thing that we like to talk about is abundance mindset. If you have replication in your trading system, why do you care if you miss out on opportunities? If you're an investor, sure, you could be sitting there slapping yourself this weekend saying, what have I done? Maybe you were right. Maybe you made the mistake. But if you're a trader, you don't care. There's an opportunity right around the corner. There always is, and there always will be. Let's move over to Bitcoin. We've been talking a little bit about the rainbow chart just because it shows investors' levels. I think Bitcoin's been a tough trade recently compared to the rest of the markets, gold, metals in general, S&P, and of course, the US dollar has been a little bit easier. But let's have a look here at Bitcoin on the weekend. It's still holding its own. It's been as high as 24,674. Bigger volumes coming in. Take a look at these volumes. Wow. Through this exchange, way higher. So lots of potential accumulation here. I mean, we haven't seen volumes like this since that previous accumulation that happened in June. We all know how that worked out. So big volumes, similar to some of the base lows that we've had before. I mean, it kind of looks pretty good. Obviously on things like the rainbow chart, it looks better. And let's go down to the 2-hour chart and have a look here. So markets changed. They changed trend. They basically busted up and through our supply. They came back and got a pullback. They did a nice kind of turn here. And at this stage, it just seems to be making a series of higher highs and higher lows. Would like to see it hold this level here. But at this point, it looks like Bitcoin's being bought in terms of the dip. and hopefully that continues. Let's move over to some other stuff, some big news coming out. If you haven't already, come and join us in the Discord community. We've got a private Discord and a public Discord with over 10,000 members in it, so definitely come and join us. Also follow us at FX Evolution on Twitter. And for the week ahead, let's have a look here. So we've got PMI 10 a.m. New York time, Monday, August the 1st. Then we have the cash rate coming out of the Australian market. That'll be an interesting one for Australians out there to see how much property is going to get hurt by a big rate hike there. Then we have the JOLTS job openings, 10 a.m. on Tuesday, August the 2nd. And then we keep scrolling down. We've got ISM Services PMI, Wednesday, August the 3rd. Monetary policy coming out of the Bank of England. And then, of course, our favorite or not so favorite return result, which is non-farm payrolls. So it's another week of big economic news, pretty decent earnings, and a whole bunch of other stuff. So stay tuned to the channel because we'll be covering it daily here and we'll be updating you on all of the big changes. It is a fast market out there, guys. Thanks so much for subscribing. Thanks for supporting us. And we're almost at 100K. So if you are wanting to take us over the level, why not consider doing it now? Thanks so much. See ya. Bye for now.